Hello neighbor, I'm Robert Burns and welcome once again to another edition of Sound Off Louisiana, and today we will be wrapping up our coverage of Governor Landry's fiscal reform, tax reform, which as everyone knows by now, he got resounding success in the legislature on. But you may remember from our last feature that one component of it ran into some problems. Namely House Bill 9, which was an expansion of the sales tax to cover a number of other activities. And we emphasized in that video that Governor Landry had invited any suggestion, this is back before this all erupted, that if something became problematic, he invited anyone to make a suggestion. We're going to break away right now and let you see him telling the legislators, you make a suggestion if you want to pull a string out, as he used that analogy. We'll be right back.
And I want to emphasize again that the full structure of this package makes it dependent upon its entirety. However, I want to also offer you this. As you work through this legislative process, it does not mean that what is in front of you is ironclad, a concrete. If you have a way to achieve the same goals that we're all trying to get to, then we certainly are open to and want to talk to you about that. So believe you me, there is, in my opinion, flexibility in trying to get us to that particular path. That's the thing I appreciate the most about the legislative process.
All right, as many of you will remember, we came forward with a feature that said, okay, hopefully that admonition to the legislators would also apply to just ordinary citizens, which would include myself at Sound Off Louisiana. And in our last feature, we made a suggestion. And we're going to break away right now and give you a quick little segment of exactly what our suggestion was. It basically was a return to the clean penny of Governor John Bel Edwards. We'll be right back. Like I said, I'm not a legislator, but I'm going to express my opinion and the sentiments that I know I've heard from a ton of other folks. And that is, if House Bill 9 has to be scrapped, because it looks like it's got a lot of opposition. That's why you haven't seen a vote on it, and you may never see a vote because some of this opposition, I would imagine, is quite stiff. But if that's going to be the case, and so there's about $500 million or so a year that's going to have to be made up somewhere, just like Governor Landry said, then my strong suggestion is let's revert back to Governor Edwards's clean penny. All right, I will tell you that when I published that feature, I did get some immediate feedback from some of the governor's upper brass, and let's just say that that suggestion was warmly received. And as you may know, the clean penny was incorporated into the final legislation. But right now, I want to address, now hear what I'm saying, I want to address head on, I'm not going to name names, I'm not going to dignify it, to be honest with you, some of the false narratives that were put out there in the media and by some other folk that have prominent platforms upon which they can get their message across, in many instances more prominent than mine. And to do that, the false narrative is that, well, this was all geared toward the rich and nothing for the lower income people, or almost nothing. That is completely false, okay? And I'm going to demonstrate authoritatively just how false it is as we get into this video. Let's take just a moment and first of all let Governor Landry explain why there was a huge benefit for the lowest income taxpayers. We'll be right back. We're going to break away and have Governor Landry emphasize that fact. We'll be right back.
Eliminating the bottom bracket. That is extremely important. That means that the lowest wage earners are going to receive the biggest tax cut. We're going to give them the most relief.
All right, you've just seen Governor Landry emphasize that fact, but I want to say this, even Governor Landry did not go far enough, okay? And we're going to explain to you why and why those media reports were so false, misleading, and we're going to cover some other things that were false and misleading about media reports before I'm done. But let me just say this, let's take a single taxpayer in the state of Louisiana with $35,000 of income, which I think anybody would say is not exactly wealthy. All right. In fact, you might argue that that's someone who's struggling. Now, if you want to use married joint, you're going to have to double the figures, but the same principles apply. Okay. So we've got this Louisiana taxpayer who has $35,000 of income. Well, as Governor Landry just pointed out, his plan eliminates the lowest tax bracket. What savings does that put to that individual? $231.25. And we're going to put the computation on the screen for you, and we're going to put it within the body of the feature of Sound Off Louisiana. For those of you who only watch the YouTube videos, you're going to need to click on the link for the Sound Off feature to see us doing that. But we're also going to put it on the screen, $231.25. How did we get that number? We took the 0.0185, the 1.85% that is applicable for the lowest tax bracket, and we multiplied it by 12,500, which is where the lowest bracket ends. All right? That gives you a $231.25 savings for those taxpayers that Governor Landry was referencing. But here's the kicker, and here's where Governor Landry didn't go quite far enough. Well, he needed to emphasize this too. I'll put it this way. His package also increased the standard deduction from $4,500 to $12,500. Okay? Look, in full disclosure, I am an inactive CPA. I'm a numbers cruncher. You know, I love these sorts of things. I know I'm a strange duck in that regard. But what does increasing the standard deduction by $8,000, what impact does that have? It has the impact of lowering your taxable income at your highest bracket. So for that $35,000 a year taxpayer, he or she's going to get knocked into what is presently the 3.5% bracket, okay? So the amount of that increase in that standard deduction, you can do the math, 12,500 where we're going, minus 4,500 where we are, that's $8,000. If you multiply that $8,000 by 3.5%, which is the second highest tax bracket now, what you come up with is $280, okay? $280. That's even larger than the tax savings that Governor Landry did tout, okay? So for this $35,000 a year taxpayer, you need to combine those two amounts because his plan does both, okay? So when you combine the $231.25 from the elimination of the lowest tax bracket, and you add in another $280, which is going to be the savings from the raising of the standard deduction from $4,500 to $12,500. What you come up with, and we're going to put the numbers on the screen and we're going to show them in the Sound Off feature, is $511.25. Let me say that again. For a taxpayer in Louisiana who is earning $35,000 a year, he or she is going to receive a tax savings from this plan of $511.25. Now here's what I want to really emphasize, okay? You would have, do you know, the trade-off is the clean penny sales tax, okay? Which is a 0.55, in other words, 55 basis points increase in what we have today. So the trade-off is you just got $511.25. Obviously, the trade-off is you'll have to pay that 0.55, added 0.55% when you purchase anything. It's a clean penny, okay? We can easily back into how much money you would have to spend in order for that $511.25 in savings to get wiped out. Do you want to know what the number is? And we're going to show you how you compute it, okay? The number is $92,954.55. The way you compute that is you take the $511.25 and you divide it by 0.0055, which is the increase in the sales tax. Somebody needs to explain to me how someone making $35,000 would be capable of spending $92,954.55. Now, anybody with any intellect out there may say, okay, if everybody's taxes are being dropped like this at the low income level, how is this going to work? And here's the answer. And there again, you have to realize what my background is, all right? It's called velocity of money. And for those of you who did not major in business, it's very simple. It's a dollar turning over multiple times in a given year, okay? And the velocity of money is a direct measure of how strong an economy is. If a dollar turns over 4.8 times, I'm just putting a number, versus 3.2 times, you got a much stronger economy. So what I'm saying in that, let's just say that as a result of this tax reduction, Joe Q. Public goes out and spends another $400 on this, that, or the other, all right, because he's got the money now, all right? You don't, that money doesn't just go into a dry hole, all right? And we're going to provide a link where you can quickly watch a video on the velocity of money. This is not some, random stuff I'm making up. The government has ways of computing velocity. In economics classes, you'll find it's a function of the gross domestic product, and there's a formula in there, and they get to this velocity of money, and it is a key measure of an economy's success. So the velocity of money, Joe Smunk spends that $400, well, the person who got it, whoever it is, be it a merchant or something, they're going to be spending money, all right? So it gets taxed over and over again, okay? That's how this works, okay? So I can only tell you that if I had been governor and I had seen some of the utterly false narratives that were put out about this package, it would have taken everything in me to keep from going up to one of them and slapping the living blank out of them. I mean, it is so aggravating to see the propaganda, and I'm not talking about just mainstream media. I'm talking about some folk that have conservative platforms that are, as I said, larger than mine. And one of them just made up a number. I mean, he just literally made it up. By the way, we will be updating the table that we presented. It's going to have all of the amendments. Now, bear in mind, this is in broad form, but I believe it's extremely accurate. So it will give you a good idea of exactly what all happened and how we got where we are. House Bill 1 had to be consolidated into House Bill 10. House Bill 9 went out the window. That was the one that was going to expand the sales tax onto other items. But you can look at this table. I did it that way for a reason, so that you could get a very clear picture in fairly concise terms. And if you want to see the numbers that were backed up by the Legislative Fiscal Office, it's right there for you to click on to see the fiscal notes that accompany these bills. Because I like to strive to make sure what I report upon is factual and not go running out there making up numbers as was done in this case. And also trying to get a slanted picture of what's going on here to play on folks' emotion that the lower income folk aren't getting a huge benefit from this. I've just demonstrated to you how they are. In fact, they're getting a disproportionate share, but that's fine. All right. As I wrap up this big video, I need to make sure everyone understands two other points that have also been misrepresented in the most recent media outlet feature that I read on this. And that involves the teacher pay raise, because reading that article, you would think, well, this is a done deal. The teachers are getting a pay raise. It's a done deal provided the constitutional amendment on March the 29th of 2025 passes. Please don't ignore that fact. For all of the teachers out there, because you read that article, it's like, well, this is done. No, it's not done. That constitutional amendment has to pass on March the 29th of 2025 for that to happen. Likewise, now hear what I'm about to say now. We talked about the standard deduction going from $4,500 to $12,500. We talked about how that would benefit the lower income taxpayers. It benefits everybody, but it disproportionately benefits the lower income taxpayers, okay? Governor Landry has also proposed doubling that standard deduction, which is now going to be $12,500. Starting in calendar year 2024, it will be $12,500. Also within that Constitution, now this is for seniors 65 and older. Luckily, I'm getting close, folks. That standard deduction would be doubled from $12,500 to $25,000. But again, that's only a function, and make sure you understand this, that's only for folks 65 and up, okay? It's only for senior citizens. But please understand, you're not, all of the seniors out there, if you're 65 and over, it's not going to happen if that constitutional amendment does not pass on March the 29th, 2025. So for every senior out there and for everyone 65 and older, please be aware both those both those provisions only kick in with the passage of that constitutional amendment on March the 29th of 2025. Now, I want to state one other thing that is going to happen, and Senator Franklin Fall did a fantastic job of explaining this, but I can already see what's going to happen with the mainstream media. If you go in and you look at the lowering of the corporate income taxes, and I put it in the table that the negative impacts of that are heavily front-end loaded. And when I say front-end loaded, I mean in the early years. As Senator Fall explained, there are exemptions that won't roll off until the third year. So if you go and look at that fiscal note on that, you will see increases in tax revenues from the later years. By the way, on the corporate, they originally sought to reduce it from 7.5 to 5.5. I'm sorry, to 3.5. They wound up having to settle in at 5.5. But I can just see right now that if this goes into effect and there's initially a hole that has to be plugged with the budget stabilization fund, I can see the mainstream media now going, look what he's done, look what Governor Landry has done. And trust me, it's coming, okay? So everybody needs to just chill out, okay? Wait for that third year and beyond, all right? This is not some overnight thing, so I can already tell that's what's going to happen in the next year. They're going to automatically start bashing Jeff Landry and talking about how bad all this is. Hang in there, okay? I'm just giving you the advance notice that that is likely to happen. And then lastly, we're going to finish this video up with a dear friend, Senator Blake Miguez, because as I told you, there was the issue of the sales tax expansion, and I'm having to laugh at this. So we're also going to give this as a separate video because I can tell you that, and Senator Miguez is not alone in this, to say that there was some heartburn over House Bill 9 is an understatement. I mean, a huge understatement. And so when Senator Miguez took to the floor to ask some questions of Senator Foyle with regard to this whole package, he asked some softball questions which were clearly designed to let everyone, including him, tout the benefits of this. But then he had to shift gears. Again, Senator Miguez, please, I'm not laughing at you, I'm laughing with you over this. Senator Miguez had to shift gears, and he wanted it on the record that, hey, none of these services that were originally in House Bill 9 are going to have to result in people who weren't having to charge sales taxes suddenly having to become them. So we're going to wrap up this video by letting Senator Miguez get that clearly on the record, and we're also going to put that as a separate video. So folks, let's break away right now and have Senator Miguez make sure that's on the record. We'll be right back.
As you know, during this session, there was a bill brought up, I think it was HB 9,
yes,
that expanded a number of services across the state, dealt with things like maybe grass cutting, car washer services, a lot of things that the everyday worker in my district, it would affect their daily business activities. That bill did not make passage in the House of Representatives. And it drew a lot of concerns and a lot of discussions back on, which I think those discussions will be furthered in the future. Is any part of that bill in that listing there that in that section that you're clarifying, tell me, I guess my question is are those items already being taxed currently and we're just clarifying them?
Yeah, we're only clarifying the definitions of the portion of services that are currently being taxed. This bill will not include any of the 40 additional services that were contemplated in HB 9, but not ultimately adopted.
And I'm guessing currently what's in the bill, which is currently being taxed, that's being through an interpretation from the department, maybe on some revenue bulletin or something like that?
Yeah, it was the department's opportunity as we reorganized and modernized our entire sales tax code. This was an opportunity to make sure those definitions were tighter and more accurate, and that's all that does.
So again, we are not expanding into any new sales tax services for the folks listening back home.
That's correct.
Thank you so much. I appreciate it.
Thank you, Senator Miguez.
All right, folks, with that, I don't think it can be any clearer. I know there are an awful lot of folks whose Thanksgiving is a whole lot more pleasing knowing that House Bill 9 died. So I hope everyone enjoys a very happy Thanksgiving. And I think we owe a tremendous debt of gratitude. Of course, the governor always gets the lion's credit, just like the quarterback of a football team. But we owe a tremendous debt of thanks to Governor Landry, to Revenue Secretary Nelson, to Julie Emerson for did she have to carry? I mean, she worked tirelessly. And certainly, all of the staff over there at the legislature, who I'm sure collapsed when all this ended, because unlike my table that I can easily modify, they got to go through an enormous amount of work every time these amendments fly in and fly out. So I'm sure they may say, well, your table may have been easy to update, but it sure was living nightmare for us. But hey, you did it for the good of the state, and I am absolutely convinced of that. I hope everyone enjoys a very, very happy Thanksgiving. And if you take nothing else away from this other than the fact you're about to get more money in your pocket, just remember, take anything the media reports with a grain of salt. And let me just say this. If there are folk out there that say you're wrong, you know, the camera's yours. The camera is yours. I invite you. Come in. Challenge. Look, I can be wrong. I'll tell you that. I'm wrong a lot. But I invested an enormous amount of time. When I said I broke away for 8 or 9 days after we did the Ronald Green feature up in Farmersville, I wasn't joking. I went over the original layout of this, and I would not have gotten behind it had I not seen all of what I believe is the incredibly positive impacts it's going to have. But if you've watched this video and you've looked at my numbers and you believe I'm wrong on something, the camera is yours. The only thing I'm going to tell you to do is don't come on here with just a bunch of emotional stuff. Bring me hardcore numbers and show me where I'm wrong. And I will man up if that happens. Thank you so much for everyone's dedication, and we hope you have a very, very happy Thanksgiving and a Merry Christmas. We'll see you again soon for another edition of Sound Off Louisiana. Thank you again.